I forget that. Hi, Patrick. Scott. All right. Tess. All right, let's sneak on over here to the Halloween theme. Look at the week ahead for 27th of October 2019. All right. I want to remind everyone that trading involves the risk of loss of capital. Make sure that you can afford what you put at risk and make sure that you take ownership on any trade. And nothing you hear tonight is a recommendation. It's just trade ideas that I'm seeing that I think are good under my conditions, and I can tell you why. You may or may not like them, and they may not be appropriate for you. If you haven't been here before, I'm an ex-fighter pilot with master's degree in both computers and business. I'm an active trader since 1998 in the dot-com bubble. Full-time trader since 2009 and a technical trader using limited fundamentals. Fall back next Sunday. Ha ha ha. Wow. I moderate for H&R Candlesticks from time to time, and I do provide one-on-one mentoring, and you can contact me at any of the through the website and or via email. All right, hit and run candlesticks. There's going to be a special offer at the end of the presentation, and you already probably know what that is, but there are three components: hit and run candlesticks, primarily stocks, swing trades, right way options, looking at position trades, a lot of times using options, but you don't necessarily need to do that, and the LTA scanner, which helps us find the setups in a timely manner so we can jump in before they run too far. Tonight's agenda, we're going to go over the economic and earnings calendars. We're going to look at our market overview and some trade ideas. I had to try to skinny it down. There were so many good ones out there. Q&A, not stock specific to start with. Wait till I ask for your stocks, only one per, and then we'll go from there. Economic reports, I apologize if it's a little difficult to see. Something is happening with my Jing copier, and it's filling in gray background instead of solid white. There's nothing I can do about it at the moment. On Monday, international trade goods at 8:30. The only thing on the calendar that's worth mentioning on Monday, we do have Case-Shiller Home Price Index at 9 on Tuesday, along with consumer confidence and pending home sales at 10. Wednesday's going to be a big day. ADP and GDP at 8:15 and 8:30 respectively. The petroleum report at 10:30, and at 2 and 2:30 are the FOMC announcement for the rates and their little announcement and a little blurb that goes, and then there's a press conference at 2:30 from the Fed chair, Uncle Jerome. Jobless claims on Thursday at 8:30, the weekly. Personal income and outlays at 8:30 as well, along with employment costs and Chicago PMI. Friday, we get our monthly jobs data for the month of October at 8:30. PMI at 9:45. ISM and construction spending at 10. So we do have a slow start to the week, but it picks up rather precipitously towards the end of the week. And we are in the height of earnings season. I know this is an eye test. I could actually post this if you want, if anybody is interested. Let me go ahead and grab that real quick. Kill that one. Add, browse, computer, trading Earnings. Okay, I've got it. I'm gonna have to actually print this in PDF. I'll put it up and post it at the end. I don't have it in PDF form at the moment. I've only got it in Word document form. I'll go ahead and post that just in case somebody can read it and wants to look at it, and I'll put it out in PDF form at the end of the day, the presentation. Let's go do a market overview. I like to start off with crude oil. Crude oil's come up to this 56.60 level, which is kind of the top of this level over here in late September, and at the volume and price levels that I like to use. And it looks like my stochastics RSI is pegged towards the top. Oh, thanks, Aaron. That this is probably going to be one of those that we could pause right here. We could pull back a little bit, but we are in a defined short-term uptrend. I expect to pull back. The volume point of control is about 55.50. Where it goes from here, I don't expect an explosion to the upside unless we get some exogenous news or event in the next day or so. Gold. Gold's still struggling to get out of this downward channel that we've been in for a while. It is drifting to the top part. My stochastics RSI says that we're probably going to pause or pull back here. That's the odds. Let's go on and jump on over to the equity markets. S&P, now look over here to the left. 3027.50 was the all-time high. We're trading tonight at 3024 and a quarter, so we're within earshot of the high. But you know, we still have not reached anywhere near the top of the stochastics RSI. So could we punch through this? Sure. Now the volume has been slightly decreasing on this move up, but price is king. Price is number one, number two, and number three. You know what they say about real estate? Location, location, location. Well, the three most important parts of the markets are price, price, and more price. All right, let's go on over then to the Dow. It looks similar to the S&P, but we've had a couple of earnings misses here, and that's depressed the Dow just a bit, so it's lagging the S&P. We're now still going up towards the volume point of control was down here right where we're at, about 2687, well 870 actually, and then the volume ups are somewhere near where we got to in mid-October. So we're gonna have to break through that level before I think we even attack the 27.2. Let's go into NASDAQ. I posted earlier the NASDAQ broke out to new highs tonight. It's at an all-time high, and we're trading now at the highs of the night, overnight session. We still have room to run on the stochastics RSI, unlike the S&P. So a little music to my ears. Russell's still lagging. Probably not as lagging as much as the Dow is. Stochastics RSI is pulling back, but it's very, very gentle. This isn't telling me we're going to have any massive pullback here. We could potentially just grind higher as this builds up momentum for the next move up. We don't know for sure. The VIX is down about 12.5-ish. We broke down the last 3 trading days, and that bodes well for higher prices. The fear monster is not near us, even if it is Halloween. All right, let's go back over to look at the week ahead. And here's some trade ideas. And I have a number about 15 and 10, somewhere about that. And I'm going to sneak on over to TC2000. Before I get into that, while I remember it, I'm going to go over the T2122. I use lines, and I have upper levels. What this measures is the number of symbols that are making 4-week new highs divided by those that are making 4-week new lows. And I look at this as kind of a judge as to whether we're overbought or oversold. What it is right here we're at about 80%, so we're getting 8 going up for every 2 that are going down. So the 4-week new highs outnumber the new lows by 4 to 1. That's pretty bullish. We're not in any kind of danger for a pullback normally until we get to the 85 to 95 percentile level. And the bounce zone down here is 20 to 7.5%. So anywhere in the middle, we could just continue to grind higher. And you notice the green line is the percentage, and the blue line is the S&P 500 SPX cash. All right, let me go back over here now and look at the daily charts of the stocks that I have on my list. Now, you notice I have 25 items on the long. I'm only going to talk about my top 13. Starting with Aflac. Aflac doesn't report till January. It's got a resistance level of 53.75. The stochastics RSI looks like it's trying to curl back up. I would be looking for a move above that, and the first level of resistance might be as early as 55.13, but it's probably going to be more like the 56 level. All right. Next one is Berry, B-E-R-Y. This is a rounded bottom breakout. Is it a rounded bottom breakout or wannabe? It's 14%. We may or may not do this in a straight line. We might get ourselves a pullback. Maybe the buy zone would be somewhere back in here instead of buying a breakout and let it run. Hopefully we do get a pullback and we'll have a chance to get in, but that's what I'll be looking for. I'm not going to chase it now, because what I have to have is I need to find a level that I could use as a technical support for a stop. 41.25 is about where it is, and that's kind of where I do the line here, somewhere around 41 to 41.25. So I'll let it pull back, let it establish a higher low, and then go from there. BIB. Now, BIB's on my list here, not necessarily because it's the greatest setup in the world, but it is a setup that a retest of this area at 309.95, let's call it 310, is highly likely, and likely over the near term. What it did is it gapped up, 30%? Yeah, it gapped up almost 40% from 220 to 315, 310. And then it pulled back. Now this is the quad lines, which is the quick and dirty cheating way to do a Fibonacci retracement. This one did approximately 1/3 retracement. That's pretty darn good. That's pretty bullish. So Biogen, any time in here right now could probably be a long. Where would I have my stop? I'd probably have my stop at 281.15, but no lower than about 275. Because if this thing starts to turn around and go the other way, let me get my crayons here. Red. If it goes up here and I buy, and then it turns down and goes down to this level right here, I don't have to let it go all the way down to this level at 275 to realize it's not doing what I wanted to do. It showed me, it would have shown me a good move up, maybe 2 days worth, and then rolled over, and that's not good. So I have pretty tight stops. All of us ought to have that with low commissions now. BSX. BSX reported earnings, gapped out of this consolidation area. I think it's set up for a 45-degree angle move higher up to this, 4250 area? Yeah. So 40.5 to 4250, about 2 up, about 1 to 1.5 down to the downside. I would use somewhere just below $40.25 as a stop. Probably the buy, maybe 41.25. So 2 to 1. That would be my first target. Second target would be up here around 43.5. CNC, 10% of the float is short, and I'll tell you that what that means to me is that if we get any kind of movement, and we got good movement here about 4 days ago, you're going to get fuel on the fire for the rally. I think this does probably a 45-degree runner up towards the highs here. The RBB target is the 200, which is over 10% away. So anywhere, maybe probably over this level around 49, and moving up to 52 to 53, something like that. Cabot Oil and Gas. It's been bumping up against this $19.50 a couple of times now. Will it get back up through there? May take a third time. I'm gonna keep my eye on it. If it gets over there, 9.15 to 9.25, I got a little over $1 there, and I could probably have a stop at less than $1. It doesn't report again until 2:28, so we've got plenty of time to run. First target resistance going to be heavy here at 20.50. The next level is going to be 21.75. Make sure you get a good risk to reward or reward to risk. The reason I like this one here is that I can use the hourly chart of here about 1865. I do not need to go all the way back down to 18.25 on the daily. DK. DK looks like it wants to break out, and I think it wants to go. Pam, can you hear me? If so, you may want to check the tabs. You're not getting the. You're talking about the chat's not moving, and your chart's not changing. You may have it stuck. It won't move unless you're at the very bottom. All right, make sure that you hit the down arrow. No chat since I'm talking. Yeah, unless somebody, yeah, okay. Pam, nobody posted. From Aaron at 8:07 until you posted it for 12 minutes later. Everybody's paying attention to me talk. Hey, that's good. Or nobody's here. Anyway, DK over 39. I think it moves up here to this $43 level. Let me get that. Right there. There's very little to get in there. Hal, another good one. You got a number of oil and gas starting to show up over the highs of Friday. I think this puppy wants to go probably anywhere from 21.85 to 22.5. They tend to run further than we give them credit for. So this one could be a pretty good runner. It doesn't report again until January. October, November, December, January. This was the reporting date, I bet. Back here. Nice bullish engulf and move higher. This one might pull back. We might get an opportunity to buy it a little bit lower. So be careful. IPG. Looks like it probably wants to go up here to 23. It did a gap up on Friday. My, this is the third time now at this 22-ish, 2185 level. If it's going to break out, it's going to break out this time. One I really like here is Mohawk. Now, Mohawk would have to be an option play. I would love to see, let's see if we can get this. We change the color again. I'd love for this thing to kind of pull back here into this zone here and stop for a couple of days and then start a move up 45-degree rudder toward this 156 level. That would be ideal. The key, we have over 7% of the float is short. So with this gap up above this 130 level and the fact that we're holding solidly above 138, I believe that that bodes well for a move higher and that the shorts will have to cover. Polaris. Nice move up here on earnings. Nice flag pattern here. Now, some people could call it potentially a pennant if you wanted to play it like that. Either way, it's bullish. Where are we going to go? Probably up into this level here, 108, 110. Playing with an option that I can leverage the move here. Good balance of power. Stochastics, they can stay overbought forever. All right, we got two more here. Almost 10% of the float on RHI, gapped up on Thursday. I believe that was also earnings. Gapped up over into this prior swing level over here from August. And I'm looking, this is the, see this little doji right here, the indecisive thing? That's what I want to see out of Mohawk. I want to see something similar to that, and then it'll start its move up. RHI wants to probably hit the low 60s. Where are those float numbers coming from? 3 planets. Pluto, Neptune, and Uranus. Now, Michael, good question. Let me show you where I get that. All right. There's two numbers I'm getting them from. 2 places. One, I look at the earnings, the ones on the earnings. I do a filter, and then I bring up ownership and look under float short and sort it on that. The other way, if you have an individual stock you wanted to look at, we want to look at RHI. And was it on the earnings? 9.8. Or you could go to FinViz. Or over here on FinViz, I could do here, RHI, and there's 9.8. So there's 2 places I can get it. Both of them are free. However, both of them are not real time. They're delayed. Even the people who pay for the quote real time data are getting it about a week late. So they're a little bit behind as well. But obviously, with it gapped up and gone 2 days, that number is not 9.8% anymore. It's probably closer to the 7.8 or lower. Hey, no problem, Michael. That's what we're here for. Cooperate and graduate. A little snubbers, sleep number. You're going to say, well, why do I have this on here? It's way below the, this is up here at 50. That's your breakout level, right? Well, this is kind of a J-hook going. On the daily, let's go look at the 3-day. It's only in a weekly, it's basically going sideways. But on the daily, we had a move higher. We had a pullback. Apologize for the red. That right there, using the quad lines. I'll show you how the quadrant lines here. That pullback was about, I'm eyeballing it, that's 25%. That's halfway between the two. It's approximately 33%. That's pretty darn good. If this puppy breaks out over 48, I can go long, and 50 would be my first target. It's only $2 higher, and let's get rid of some of these here. Delete that. Delete. Delete. All right, and if we went long here and I did a stop somewhere in the middle of the candle here, a little over a dollar, dollar and a quarter, and I get $2 higher or more. So a little over 2 to 1, about 2 to 1. That's good for my first target, and more than that up to 51.60. Now, I did not look at number SNBR. Ahaha. I'm glad I did look at it. Here we go. 22% of float short. I feel even better about it now. All right. Now, there are a number of stocks that are not on my list here that are on my list, but I didn't cover. They're a little bit lesser. If you want to take a snapshot of that, maybe Aaron or somebody take a snapshot of the other ones so you could go look at. That would be good. One of them that I want to put on my list is Hog gapped up. Let's go look at the shorts. All right, I have 10 shorts and one, I'll call it example. Let's do these in alphabetical order. The first one's Accenture. Is this really one of those that's perfectly set up for a short? Not exactly, but it's been riding this channel down for quite some time. And it's going to continue to do this until it doesn't. I know that doesn't make a lot of sense, but maybe a break here below 182 will take us below 180. Thanks, Aaron. Appreciate it. You're a superstar, sir. Yeah, and then 180, break 182. It'll probably drop down to the rising 200 at least. AEEE. Surprised to see a utility on there. Sorry, I had to wet my whistle. I was losing my voice. We break below this red line. First target 75 and a quarter. See that rising 200? That's probably a target. If you look at it, somewhere in this number down in here is probably where it's going, if it can break both of those two levels. Apache going against the grain with I was looking at it as a long a couple of weeks ago. It failed. When it failed this level there, it was actually a short. It bounced fairly heavily to a bear flag. It continued a lot further than I thought it would, but then it came crashing down on Friday. And intraday, an hourly chart, you can see how it's also doing the flag on the hourly chart. So this puppy rolls over. You could probably go short with your stop right above these levels here, around 22.5 or so. First target would be a retest of the lows there, and maybe even further. Now the only gotcha is that it did a double bottom, but it's failing. It did a double bottom. Will it pause at this bottom again, this 20 and a quarter level? Yes. You've got to count on it trying to attract buyers again there. And it may wobble. It may wobble for a day or only an hour. Maybe only 15 minutes. But you've got to at least expect that it's going to get some sort of reaction from the markets at that level. Boeing. Boeing went down, gap lower, capped up. If it blows through this 340 level, it's probably doing at least a retest of these areas right in here. I'm going to call it an area because all of my support and target areas are all, so we support and resistance are levels. Yeah. Okay. That is a level. That's an area. It's not a hard and fast to the penny. So somewhere in there would be my target if it blows through there. Could it go even lower than that? It all depends on the news. They're still having trouble with the 737. Till that 737 gets certified again and it starts getting confidence from airlines and probably better yet, flying customers, it's going to have a tough time. I think I read where they have a huge inventory and backlog of 737s that have been that are undeliverable. GD, I think it's below the 200 now. I think it has a chance to break quite a bit lower. 170 to maybe even down to these lows around 160. We are in a solid trend. Let's look at our EMAs. That's a solid downtrend. Now, could we get a reaction right here to this 170 to 173 area as another potential bottom? Yes. We had that once, but it kind of failed. No, it didn't kind of fail. It did fail. It got all the way up here to 180 and is finally back down to 173. Kimberly Clark. I guess not selling all the baby materials and stuff. This puppy, I think, wants to go back down to 128.5 again. Again, rising 200 goes below this level here on the trend line. It's worth about $3 to $5. Lockmart. I call it the dark side. I think 357.5 is in the cards for this guy. Maybe even lower. Now, I have a line drawn here earlier at 335.85. That could be a target. But our first target's 357-ish. I'll call that maybe, let's call that 57.25. When we get to that level, I'm going to do 25-cent increments. All right. I feel a theme coming here. Knock. We're talking aerospace defense or defensive related. 345. Looks like we're about ready to break that puppy. I think we go to 336 to even 330. I would think the 330 might be in the cards here. Right in there. Spirit Airlines. Ooh. Was doing okay. It kind of wobbled down, tried to do a reversion to the mean. It just would, it died. We have earnings on the 31st on that one. Don't think we've got earnings anywhere near the others. Apache has it on the 30th. Be careful. I thought I'd weaned those out. But Spirit, watch out. Aha. Thank you very much, Bob. I was unaware of that. That would make a lot of sense. Symantec reports a couple of weeks out. And a couple of things you can do. Let's just say that you've got you've got Apache here. You could potentially say, I'm going to wait till the earnings on the 30th, which is Wednesday. And I go, okay, I'm going to look at it. I'm going to figure out whether it's I'm going to let it report and find out how it reacts. Then I'm going to trade it. But I've already had a chance to look at support, resistance level, and therefore I can jump on it right away. And Spirit, when it reports, we see what it does. If it gaps down to 75 or so, that's at a swing level for me, and then I could potentially go short. If it gaps up, unless it gaps up above 84, 85, I'm probably not interested in the long side. Symantec, I'm looking for maybe a fall down below 22.75 in anticipation of bad earnings here around the 21 level. You may or may not want to try to trade it before earnings. You've got about a week and a half, almost 2 weeks. If you decide that's not good, just put it on your watch list and watch afterwards. I wanted to bring up Starbucks because we were watching Starbucks back. Actually, we were long Starbucks until it got up here. It got up to this $89, $90 level. Then it gapped on earnings. I got out of it before earnings. Was trying to find a way to get back in. Then I said, you know what? This is not reacting all that well. So I stayed out of it. It went down to the low end again. And then once it crapped out of this box, let's put this right here. Once it dropped out of that box here, you knew that the next level was going to was what, 80, 89 and a quarter? And at 89 and a quarter, you got a reaction. Remember what I said about one of the other stocks? That expect a reaction at a support level. Doesn't mean it's going to hold, but you got to be respectful that it might at least attract buyers. Well, for 2 days, it held, then it gapped up, reverted back up to the bottom of that box, and then failed. Once it failed there was an opportunity to go short again. 89 and a quarter. Some people are waiting for that. Up. It tried to get above there again. It's doing a reversion to the mean. It's bouncing around. It's trying to decide whether it's going to go lower or not. So if you're not short by now, 89 and a quarter is your number. And there it is. And there it is. And it drops to what? It drops down to our next support level that we drew. This consolidation area around 83 and a half. So what I wanted to bring out was when stocks drop out of support levels, they're going to go to the next support level. When they break above resistance, they're going to go to the next resistance. Support and resistance are key. We're going to hammer that home again this week. We talk about it every day at our trading rooms, and we try to find where the support resistance levels are on every stock that we consider buying or selling. All right, let's go back to the presentation, see where we're at. All right, there is a 60-day trial offer for people who are not members. This won't be canceled between now and next Monday. So if you want to wait and do the open house for 2 days and then sign up for the trial, you get 2 months for basically $25 per month to look at either hit and run candlesticks or right way options. Your choice. You could do 2 months in one, then 2 months in the other. See which one's best for you. Right way options is the best. Doug Campbell's probably the best options trader I've ever run across. And I'm not just saying it, I'm saying it because I believe it and I see it every day. All right, thanks, Aaron. Appreciate it. All right, we also have our open house on Thursday and Friday. We start up at a little after 9 o'clock. We're going to combine both of our rooms, open up with no password. We're going to have hit and run and right way options members together. Thanks, Aaron. We're going to start the talk at 9:10. We're going to run right way options in the middle of the day. I'll be in assisting Ed as much as possible. And we have some presentations. I think the slides are up. There's going to be some changes to that, but basically we're going to fill in the gaps here. But we're going to talk about Bounce and support, support and resistance type of stuff is what he's going to talk about. Then we have RWO, the afternoon. I'm going to talk about some day trading, some economic news in the afternoon on Thursday. Well, I'm going to show you what we did on Wednesday when we traded the FOMC. And then on Friday, some trade planning examples. And Doug comes on in midday talking about Heiken Ashi. Then Ed will come on after that, and he'll talk about how he uses the LTA scanner to scan for Heiken Ashi setups real time. And we'll continue to talk for the rest of the day until the markets close. All right, so be there, be square. We're open from basically 9 to 4. Some people are here longer than that. All right, let's go to the next one. If you want to follow me, you follow me on StockTwits. Here's my StockTwits handle. I don't post as often as some of the people out there. What I normally try to do is only post stuff that is important and not garbage. And there is my YouTube channel where I have a number of videos that I've done in the past. If you wanted to go back and look at them, feel free. I think there's a lot of good stuff. There's some long videos in there, about of an hour. Yeah, and I think some really good stuff. All right, I'm going to open up for general questions, not stock specific. Check marks to the right of my stock picks. Okay. Are you talking about... You're not talking about trade ideas, I don't believe. And I don't think you're talking about the earnings calendar. So what I'm going to make an assumption is that you're talking about my TC2000 and you're seeing these check marks, right, Ken? That means that fulfills this criteria here, which is an inverted J-hook. So what I do, if I scan stocks, that's how I found these. I looked for to be the opposite of the above criteria here. I took my J-hook and I just inverted everything. So this scan became that scan, but inverted. Okay, and that's how I find them after hours. The LTA scanner runs during market hours, and what I'll do is I put together a combo list of all stocks and all ETFs and filtered them out for ones that have decent volume. They have a decent average to range, better than 0.225, but better than a quarter. Trades more than 485,000 shares a day, and is between, I think, $5 and 10,000. So it's basically 5 and up. And I come up with 1,029 tradable stocks. The universe that I originally had when I put them both together has 2,481. But I've eliminated well over half of them by using my filters, and I don't look at anything that doesn't meet my filtered criteria. If it trades too low a volume, the price is too low, any of the criteria there, it doesn't move. I don't want to waste my time it even coming up in a scan. I don't even want to waste 1 second when I go from down arrow, down arrow, down arrow. I don't even want to waste that. All right. William P., do you have any comments on the process of getting... no. Actually, I haven't been following it well enough to be able to do that. William P., if your volume is cutting in and out, it's probably an internet connection. If everybody else is hearing me fine, it's probably your internet connection. Sorry about that, sir. We are recording this. I will post it up on my YouTube page later tonight. Okay, Mel asks the question, where's the usual target for J-hook patterns? Well, that depends on who you're talking to as far as a J-hook. All right, let me draw one. A J-hook to the bullish side has a strong move up, followed by a pullback, followed by bottoming action and a move higher. All right, that is the J-hook. Some people say traditionally the J-hook is not formed until you pass through the prior swing level. And I say, okay, so it passes up through that level. What does that mean to me? Well, to me, that's my target one. Because when it goes down here and it shows that it doesn't want to go any lower, I want to go long here with a stop initially under that level. And when it goes back up to here, ka-ching, I take my first level of profit. And if it bobbles or fails or does a little bit of a breakout and fails, I've already got money in the bank. And in fact, what does it have to drop to before I lose money? It's got to drop all the way back down to here, and I'm not going to let it do that. So as soon as it goes up and gets basically to that first level, I put my money in the bank, I've got a guaranteed winner. Unless I get a gap down overnight that takes it down below that. But normally, that doesn't happen, by and large. So, traditionally, people will say, okay, let's get the J-hook going. Let me find a good J-hook here. This is kind of a J-hook pattern here. It didn't exactly work right off the bat, but the J-hook pattern that I'm looking for is this move up. Oh shoot, let's try that again. Strong move up, pull back. Notice how the 8 and 17 scrunch on each other, and then you get a move up. And there would be my first target. Now, this would have stopped me out. This one would have failed. So, my first target is about swing level, prior swing levels, and it better be somewhere around 1.5 to 2 to 1. And then above that, I'm going to probably use a Fibonacci extension, or I'm going to look back to the left and see if there's any swing level, prior swing level that would act as resistance. Okay, hope that answers your Mel. And then yes, I don't use moving averages as support, resistance, or targets. I use them to help visualize the trend. And I cover that in depth in some of my videos. If you look at go to my my YouTube page and then search for, let's see if we can get that come up right now. YouTube, go to videos, let's go to search here for favorite. And there you go. You're going to see my favorite chart patterns for swing and day trade. An hour long and 48 minutes long. And that talks about everything that I know about swing and day trading. Don't hold anything back. Now, there's an art to trading. I can give all this away to you guys, but unless you see us and hear us again and again and again, it's not going to sink in, because you're going to see that pattern, but in the bigger picture context, it's going to not be there. It's not going to be a good setup. So you don't feel that if you go in here and you look at my videos even 3 or 4 times, that you're going to get it all. You're not. It's a process of getting it. If nothing more, sign up for the 2 months and we'll help you learn. Then what will probably happen is you'll become a member for life. All right. David M. wants on a J Hook, the AB28 is true. You want to know. And Rick had used a scanner at a naming convention. AB is above, and it's the 8 exponential is above the 20 simple. And here, the 8 exponential is above the 34, the 8 exponential is above the 34 exponential, which is above the 50 simple. So, what he's got here is we're basically just defining ourselves as an uptrend. 2 days lower highs. We tried lower lows, but it sometimes doesn't do that. But we noticed that at least 2 days of lower highs works. Up today over yesterday's open and close, meaning it's the highest of the two. Average daily volume, set it to whatever your minimum is. Price history, set to whatever your minimums are. And I ought to okay. And then the average to range. The minimum I see at average to range is 25. I'll cover that in a minute. John, come right on back. Average to range of 25 cents. If I have a $40 or $50 stock or $100 stock, 25 cents is not going to do it. I'm going to need 50, 75, a dollar as an average trade, the high to the low to a day. But I don't want to throw the baby out of the bathwater. So if I've got a $10 stock and it's moving 28 cents, if I moved it to 50, I wouldn't see it. Okay. Robin asks, what is the buzz? The buzz is a TC2000 number that compares volume today to the average volume over the prior month at the same time of day. Well, you're going to see here, there's a lot of stocks that are in the red. That means they're not trading as much as they did in prior days. But that's Aflac going up, less volume. Hey, it's a Friday. I'll give it that one. It wasn't ridiculously low. I'm not a big volume guy. Price is king. Cabot Oil and Gas went up on 29% more volume than normal. Charter gapped up. I bet on earnings. 10.25, yep. On earnings, gapped up. Double normal volume. Oh, sorry, 106% of normal volume. Thank you, Aaron. Appreciate it. You're a star. So this can tell me intraday whether I'm getting a lot of interest or not. I keep it there. I used to use it a lot, especially in day trades, but it's not the be all end all because price is more important. All right, Bob P. asks, when you're looking at possible bullish moves like CNC, let's bring it back up. What am I looking for in your stochastic since it's heading down? Actually, this one right here, let's change here. I'm going to change that color to green. Set as a default. And I could play this one as either that way or I could play it that way. Either one, those are bullish. We break above that upper line. What I'm looking at here is this is pulling back. This is pulling back. I don't have a divergence. What I've got is this one's doing a gentle pullback. Price is doing a gentle pullback. It's resting for the next move up Pikes Peak. For the move up here. So I interpret this is why I was saying earlier you can't just go look at the videos that any of us, Doug, myself, Ed. There are little nuances that you got to pick up, and you only do that by watching it multiple times and hearing it multiple times from us. That this right here, to me, is telling me that it's resting, it's building cause for the next move higher. How long is it going to continue to do that? I don't know. But that's a bullish setup to me, which is why it was on the list. Hey, no problem, Mel. I've had a pretty long weekend. John, you got my YouTube. It's also in the presentation or above. Okay, and the stock to its handle. Any other further questions, boys and girls, ladies and germs? All right, I am going to open up for a few symbols. One, please tell me you're long or short, thinking about going long or short, because otherwise I might talk about a direction that you're not interested in. All right, Bob S. How you doing tonight, Bob? Hope you had a great weekend. Lamb Research. I would have done it on Friday, Bob. Let's look at what the short squeeze tells me. It only has 4%, nothing to write home about. The one thing that it did do that's very, very bullish, there's a consolidation area. What? September to October, 2 months. Let me take a 3-day chart. Let me take a weekly chart. It broke out strongly on that. I would say if it were me, I'm going to wait. The only way I could do a 45-degree runner was probably look at this intraday and say that, you know what? It's breaking out here. Let's just say 15-minute chart. I look at the daily. I'm drilling down. It goes over that, or it comes back and does what it needs. I can maybe even take a 30-minute chart. And when it breaks out, go long, follow the dots. Okay. Now, the problem's going to be is where's your stop and where's it going to come back to. Right now, it hasn't come back. Right now, it gapped from 230 to 260. We're talking probably 10%. What is that? Yeah, gapped a little less than 10%. But that's pretty strong, breaking out of that consolidation. I would wait for the pullback, let it set a higher low, and then you'll have a much, much tighter stop that's probably a better stop. Okay, let's look at Debo wants to look at GLD long. Well, let me show you a 3-day chart in gold. It looks a little better this last few days than it has, but I mean, I'm going to line up the tops of these, not the wicks. I'm trying to line up the bodies. I do something a little non-traditional, and when I draw my trend lines, I use the bodies. Up would be the up candles, and the bottom side would be using the bottom of the dark candles. Okay, this one broke out, but it couldn't hold the highs. To me, that's not very bullish. Let's go back to gold futures. Remember that if you were here at the beginning when I went over the markets, I said we haven't broke it out yet, and my stochastics on gold futures is pretty high. I'm gonna make it break out. Probably a move to 115.40, then establish a higher low. Then you know that it's established a new trend upwards. Right now, EMAs, they're kind of iffy, aren't they? See, I set it up for the EMA only chart. Okay, thanks, Val. EMA only chart says that it might go up, but this might just be kind of like this last couple of wobbles up. Maybe not. I don't see anything that I could hang my hat on. Sorry about that. Ollie, Jonathan. Yeah, I was looking at Ollie earlier. Ollie is one of those Ollie income free. Well, it's in the gap. It doesn't report until December. I like to play rounded bottom breakouts a slightly different way than maybe is standard. Is it right? I don't know. It's just the way I traded. They usually will go sideways right below the 50 because the 50 is acting as some sort of temporary resistance. It'll do a little bit of a breakout. Then you'll get the enthusiastic buyers looking for that. Then you usually get a pullback. And it can either go down here, it can pull back and go back down to the 50, or pull back and not even go to the 50. I don't want to be in this one down here. This one right here, okay, I now know what the low is. I know what they're not going to let it go below. I know what some proven support level is, either here or here, and I've got a tighter stop. Right now, you got a fairly tight stop. Well, where's your support? And go to the hourly chart. There's minor support at 65, and with this pullback, so where do you got support? Probably at 63. I don't want to go to with 63. Come on, Steve. Right. Reward to risk. People look at the reward, but I look at the risk first. Look at the risk first. All right, what I'm going to do, since I haven't had dinner yet, I'm going to cut us off. No more. No more, please. Robert K. wants to look at PS. I also had PS on the list. I think the 2050 acts as a barrier, and it reports earnings after the close on 10:30. No way you can go long here until after earnings in my book. It has resistance level at 26 from way back. And again, probably instead of 32, I could draw another one. I don't want to erase that one. Around 29. See where it goes on the gap on earnings. If it craps out, you take it off your list. If it gaps up into this gap, then you have to do a gap play. This last week, we talked about how to play gaps. For those who are members, you can go in the archives and you can view how I trade gaps and how I trade earnings after the fact. All right. BGG. Hope that helps a little bit there, Robert. Bravo Golf. 11-1. That's Friday. You're going to play it for 3 or 4 days. Okay. I think we're getting a run into earnings. You're welcome, sir. 870 potential target. Will it go all that high? I don't know. Inside of a week, it gets a little dicey to me. And where's your stop? Maybe here. Probably here. 6.5 is probably your stop. 50 cents. It's maybe a Dollar up. It's maybe 2 to 1 if it gets all the way up there. Not my cup of tea. It might work. I want higher probability trades. Google just riding this T line upwards. The buy was right here around to this J hook. That move up, that pull back, and that move somewhere around in here. And it did gap lower, but it did not close below the T line. So we're zigzagging higher. And with the NASDAQ setting all-time highs, I suspect it goes even higher on Monday. Again, where's your stop? Got to be below these lows here, 1250. Going to be an options play, right? David wants to look at AAP, Advanced Auto Parts, long. Well, Advanced Auto Parts was a really, really nice long back there. Move up, pull back, move higher. Got up to that level 160 and 170 and a half. Resistance levels, that's what it's doing. Make it form a higher low. Make sure it doesn't break below 163.75, 163.50. And then maybe it attacks 170 and a half again. Oh, you're welcome, Dolores. Anytime. Again, we're at levels on a lot of these. It's gonna be difficult because we're gonna have ones that are approaching resistance. And don't buy at resistance. And I don't buy a lot of breakouts. I buy some. I try to qualify them, but buying breakouts, they usually get retested, and I'll buy the pullback and curl back up, the J hook above it. BW wants to look at ABBV, ABV, another druggie. All right, we've got a lot of overhead resistance. Easy money's been made here from 65 to 75. Potentially, if we move higher from here, you could have a pretty tight stop. This does assume that you think it's going to get through this congestion over here to the left. I don't know. I'll tell you I don't know. CB. Well, I'm afraid the markets don't care what we like and what we want. I did have Z on my list. You can see it when it was on the list, Zillow. And I prefer Z over ZG because of the volume. Nice breakout here on Friday above 33.5. First level of resistance is probably around 36 to 36.5. It reports on the 7th. If it reports well, it'll gap up to at least 42 based on this, that it's probably going to approach the 200 before earnings. Yeah. Let me do one other thing. I'm a big proponent of volume and price. The volume and price level right here is somewhere between 35 and 35.75. That's what these skyscrapers that are on their site are telling me. And I pulled that out guessing because we had so many candles right around there. And the next level above that is between 39.50 and 42.50. That's pretty wide, but that's because of these. The gap down, probably crap out on earnings again, and the following day follow through. So if you have sink or swim, I covered somewhere in there, I don't remember where, how to put volume at price. For those who are members, they got a refresher training on that this last week. I don't know that I have it out on YouTube or not. Sorry. Valerie wants to look at Ralph Lauren. Well, bottoming is a process, and it went through that. EMA's little gentle uptick, has overhead resistance around 103. This is a divergence in, actually people could say, oh my God, I've got a divergence between price and stochastics. Actually, one could say, yeah, I've got a divergence. The stochastic's going down and price is still going up. So the next move up could be higher, more violent. Yes, it could. Just keep an eye on price first. It's pulling back. A lot of stocks pull back at the end of the day. Let's look at a 2-hour chart. Probably $98. $97.50 to $98. That would be a buy box for me. You know, Rick's buy box. He's looking for pullbacks, but it's got to be a pullback with a bicycle, a turn back up. If it pulls back too far, that won't be a buy. Well, it could break out right here and go all the way up and run all the way to 103.45. Problem I've got, it's only got 2 weeks to run to earnings. So if you wait too long, you're going to be too close to earnings in my book. Charles, hey, how you doing tonight? Melco. Oh, Melco. This over here, from this level right there down to that level right there, acted as a waterfall. Ka-chunk, ka-chunk, ka-chunk. Those had no resistance. None. You're welcome, Val. Anytime. Now, we've eaten into that resistance, and that's the levels that we're kind of going against. There is an overlap right in here. If I went to an hourly or 2-hour chart, you'll see it. Basically, because of this wick, there's some overlap in there that'll act as some minor resistance. You might get a pause, giving you an entry, but don't expect to move above 24 in the short term. When does it report? When does it report? Melco 10:30, before or after the bell? Probably after. Let me check. Before the market on the 30th. Guts to look. It's a good chart, and lots of good charts set up right before earnings, and we can't do a damn thing about it. It's a crapshoot if you did it. Got to look at the earnings dates. I missed 1 or 2 on my shorts when I was in a hurry. Okay, Bob M wants to look at Under Armour. There's UA and UAA. I like to trade UAA versus UA. It's double the volume. Tighter spreads. The chart may or may not be as good. It's roughly the same. Let's go to UAA. What am I going to say? This 2160, 2150 area, somewhere in that area. It's got to break out of it. It's been up there once, been up there twice. Make it break out of there and you may have yourself a couple dollar runner. The problem is it reports Monday next, 11/4. That would be on the Monday. And is it before or after the bell? Before the market on Monday. So you got a week to run. Take that into consideration. Okay. I want to thank everybody for being here tonight. Again, we have an open house on Thursday. We invite everyone to be here. And after that, consider taking a 2-week free trial. Sorry, 2-month trial offer for $49, not free. May as well be free. $25, for goodness sakes. You could blow $25 easily going out to eat. All right, come on over. We'll show you how it's done. If you have any questions, bring them on Thursday and Friday. And thanks to all the members. Take care. Aloha. Happy Halloween, everyone. Yeehaw.